Marc Faber. So you know where Marc stands. He's always a little concerned, but you're more concerned these days than most, Marc. Why?
Well, I'm not that bearish about stocks globally because some stocks around the world have already had major bear markets. And even in the U.S., we have to look at individual sectors, and some sectors are very depressed, like oil servicing stocks. And in particular, as I've been explaining for the last 6 to 9 months, gold and silver shares have been extremely depressed at the end of last year. And since then, they've rallied 100%, but they're still at a low level compared to where they've been in the past. So we have to be very selective what we look at.
Okay, let me get your reaction to what's happening right now in the UK. Many of the rating agencies, as you know, they're predicting a recession there. And there are some fears about potential contagion issues because of the stability or lack thereof, some people believe, within some of the European banks, because they may hold some bad paper, and the fear is, of course, that rolls over to us.
Yes.
Are you worried about contagion right now? Do you think that the financial system is at risk because of what we just saw happen with the UK and the EU?
I don't think the financial system is at the risk because of Brexit. But as you said, it seems that the European banks hold a lot of bad paper. Yes, they've been holding it for years and years. And the ECB and other agencies carried out stress tests that were completely useless. And that's why European banks essentially collapsed. But they've been in a bear market for years. They've been performing horribly. Not that U.S. banks have performed particularly well, but they've performed much better than European banks. But I'd like to say this about banks. Since some investors diversified their holdings and they want to own some financial stocks, compared to European banks and even U.S. banks, some banks in Asia are actually relatively sound because they don't have derivatives, and also they don't have huge bad loans as the European banks have.
Well, that's good to hear, Marc. So are you saying, you know, basically this is a European issue, but not something that the rest of the world needs to be so worried about right now, and perhaps that's why we're seeing a market that's up nearly 260.
Well, the market is up because it became very oversold, and it's also month-end, and there's some manipulation, I suppose, to show good performances. But what I'm suggesting is that Brexit gives an excuse to the central bankers, and I'm not saying it's a good thing, but I'm saying they have now the perfect excuse not to increase interest rates in the U.S. and actually to launch further quantitative easing measures. And when you launch quantitative easing measures, then usually stocks respond, maybe less than gold. As I said, I think gold shares are much more attractive than the Dow Jones or the S&P 500.
Marc, what do you think gold is going to?
I don't know where it will go to. That we have to ask Ms. Yellen and the ECB and Mr. Kuroda how much more money they will print.
Do you think they will?
Knowing their thinking, I think they will print a lot more. And if you look at the candidates for
So are you talking about another round of QE here in the United States, more printing from Janet Yellen?
Yes, for sure. Because both candidates for presidency, they will increase the deficit meaningfully. And that will require the Fed to buy more paper that is issued by the Treasury.
But before that happens, I mean, between, say, now and November, do you anticipate more printing?
That I don't know. But in the long run, most governments in the Western world are, if they had to account like a corporation, they'd be bankrupt. And so more money printing will become a necessity.
Yeah. Well, yeah, we need to get some discipline when it comes to getting our financial legs in order.
I think that each investor must own some honest currency. And quite frankly, when I look around the world, the only honest currency is gold, silver, platinum.
All right. Marc's telling us to buy gold. But Marc, in all fairness, you always tell us to buy gold.
Yes, it's been a very good investment since 1999, much better than the S&P and much better than tech stocks in the U.S. And certainly over the last 6 months, nobody can accuse me for having been wrong to buy gold.
All right. That's true, Marc. And by the way, I should point out this is
the more recommend it to you to buy treasury bonds.
This is the most optimistic I've heard you in months. So it's a pleasure to talk to you, sir.
It's not a very optimistic outlook for the world.
For you.
I told you also to buy treasury bonds. And what have treasury bonds done? The long run is up 20% year on year.
Marc, good to talk to you. Thank you very much.